Hello, I'm Markus, and today I want to talk to you about one of the biggest lies the financial industry tells you. I'm sure you've heard this sentence 100 times. Just buy and hold. In the long run, it always goes up. Yeah, every time the market crashes, every time your portfolio is down 20%, this sentence appears. And it sounds reassuring because it tells you that you don't have to do anything except wait. But today, I'm going to show you the data, the real data. And then you decide for yourself whether buy and hold really works. So I would say, let's look at the data. It was in Japan, 1989. The Nikkei index was at its peak. Tokyo real estate was worth more than all of California. And every buy and hold investor wanted Japanese stocks. But then it came as it always came. Then the crash came. And if you bought at the top in 1989 and just held, guess how long you waited until you got your money back? Yeah, 34 years. Only in 2024, 35 years later, did the Nikkei reclaim its 1989 high. Guys, that's an entire working life. That's your best years. That's a complete generation waiting for the long run always goes up. And you know what trend followers did during that time? They shorted the crash in the early 90s and made money on the way down. They didn't keep their capital trapped in a dead market. They went where the trends were. US tech in the 90s, commodities in the 2000s. The capital was free, not trapped. Let's look at another thing. Look at the dot-com bubble. If you bought roundabout at the top in the 2000s, you lost 80%. You know what? And then they told you, stay in, it will come back. Yeah, sure, it came back, but not until 2015. 15 years where your money was simply dead. While trend followers excited in 2000 shorted the crash and then rode the huge bull market in gold and oil from the 2002 to 2008. 15 years of dead money versus 15 years of active trading and investing. But the real test came in 2008. The S&P 500 lost over 50%. So now imagine your account is at 100,000 euros maybe, or dollars, and suddenly it's only 50,000. And you know what that means? You don't need a 50% gain to get back to 100,000. No, you need a 100% gain. Ladies and gentlemen, that's the mathematics of loss, and it's really brutal. While buy and hold investors watched half their wealth disappear, the great trend followers had one of their best years ever in 2008. No, not because they were lucky, but because they understood what happens in a crash. Trends explode everywhere. Oil crashes, bonds rally, and they were long. The dollar moves massively. They didn't just survive, they profited while others bleed. And then there's another problem nobody talks about: survivor bias. So you assume the companies you buy will still exist in 20 years. But ask the people who held Enron or Lehman Brothers or WorldCom. They didn't go back up in the long run. They went to zero. In trend following, we have no emotional attachment to a stock. When the price falls, we hit our stop loss and we're out. We don't care if management says, oh, the fundamentals are strong. No, we look at the price. And if the price says, oh, wait a moment, something's wrong here, then we leave. We exit the burning house before it collapses, while the buy and hold investor stays inside, hoping the fire will put itself out. So, question, who wins over decades? So if you really have 50 years, if you never need the money, if you can mentally and emotionally endure a loss of 50 or 80% without panic selling, maybe then buy and hold might work for you. But most people don't live in such a world. Most have bills, goals, emotions. Most can't afford to wait 34 years. Trend following works because it controls risk. It cuts losses early, Japan, .com 2008, and let the winners run. It ensures you still have capital in bad times to trade in good times. Yeah, and that's exactly what I teach. Not because trend following is sexy, because it's not, or because it promises quick profits, no, not. But because over decades, it's the only strategy that works mathematically and neurologically, if you're willing to build the discipline. Yeah, and that's exactly the discipline you train in my education. 500 repetitions until it's neurologically automated, until you don't have to think anymore, but simply act, because your brain has anchored the rules so deeply that they work even when everything around is collapsing. If you're really interested in such an education, which is a technically trend-following education and on a neuroscientifically education, then maybe you're here in the right way. So, the question is basically today not anymore, do markets go up in a long run? So the question is more, can you afford to wait 34 years? So I'm Markus, and if you want to learn more about structured trading, subscribe to my channel and my newsletter. Link is in the description below the video. So I hope we see each other in the next video. I wish you a lovely evening, weekend, week, whenever you watch this video. And most important, stay healthy, save yourself and your capital. And I finish every video like I finish all videos. Have courage and be kind. And may the force of the logic and the trend following be with you, because this is the way.